Buddy, you're gonna... Oy vey. Hi, everybody. We are waiting on Brooke Villano, the VALoanBish, to join us. We're going to do a little bit of troubleshooting, make sure technology is working good. If you can hear me, clap. No, I'm kidding. Just let me know you can hear me. It sounds good and clear, because I know a lot of people are probably going to be jumping on the live. Good afternoon. Let's see. Oop, 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 oop. Didn't mean to do that. There we go.
No cameras on?
I see your icon.
It's like not working.
There you are.
What's up?
Hey, what's going on?
Hi.
Well,
How are you?
Oh, good. Apparently I'm half blind. I was gonna like put it on the selfie stand, but that's just not gonna work because I can't see anything. All right. We're gonna get there. We're gonna get there. It's gonna be good. We just gotta get the technology right.
You'll figure all this out.
It'll be fine.
This is how it goes.
Can't complain.
Okay.
It's hold on.
Is there a delay?
I don't have a delay.
Okay. Then I probably don't either. It's probably me. It's my brain. My brain's delayed.
Employment, void your mandatory time. You have to live in a house. It doesn't necessarily. Oh, and she's gone. Okay. To answer your question, can deployment void mandatory time you have to live in a house? Deployment doesn't technically count against it. So let me answer that. No, it doesn't negate anything. You still technically have to own or occupy, but the government puts you wherever they want you to go. So it doesn't hurt you if you get deployed when you're buying a house or like right after you bought a house. It's not going to stop you. I'm so glad we opted to start this a little early to see if we can get technology figured out. You guys would have cracked up. I'm really, really good at apparently making TikToks, and I know I'm damn good at VA loans. What I'm not good at is technology at all. We originally said that we were going to try and get this on YouTube Live as well, so I didn't have to pull the TikTok from TikTok and then go put it on YouTube. And yeah, I broke it. I also broke my printer today. And now we can't get Brooke on the line. Welcome back.
Sorry about that.
It's fine.
One of my team members logged in under my account and it kicked me off.
Oh, I didn't know it would do that.
Only one Brooke at a time.
Duly noted. Yeah, I've already kind of like, we had the meeting this morning and I was like, all right, because I know a lot of people are going to have questions. We're going to have some etiquette to this, guys, just so everybody knows. Brooke and I are going to go back and forth about this. Both of our teams are online. They're going to be answering comments in the comment section. So if you see somebody, if you see, oh my God, Haley, who is the British, what did she tell me her handle was?
Her British handle?
She
just commented.
Okay. Actually, I think I need to make her an admin.
She's our token military spouse.
Oh, British spouse.
British spouse.
Okay, how do I make her an ad moderator? All right. Okay, so we've got.
Catch me up. 20 minutes late. You didn't miss anything.
All right, so are you marked as mods? I'm marking people as. I don't know if it shows up to you guys as mods, to be honest. There's another one, Mark Taylor. He's on my team. That's one of our mods. Rebecca Richardson, the mortgage mentor, mortgage creator, is going to be on here. You'll see a couple other people in the comments. If you have questions, they're going to do their best to answer them. If it's a question we don't know the answer to, then we're going to find it out. Oh, there she is. Okay, hang on. Let's try this again. Follow and add moderator. I don't know who I just made a moderator then, because then there's two Haleys.
That was my other account.
Oh.
Dogs are still not a sandwich. I am on team hot dogs are not a sandwich. You don't have to tell me that. You have to convince the rest of my team that hot dogs are not a sandwich because they're weird.
Are we talking about like a Seattle dog or a hot dog?
Don't get started. Not you two. Come on. Hot dogs are not. We're not
I
doing
still
this.
don't think it's a sandwich. I just think it's in between. I don't think it's a hot dog. I think it deserves its own category.
They're the American egg roll.
No. After a late night at the bar, that's the only time I will eat a sausage hot dog. Okay, I open that up. Keep rolling.
Yeah. How do I get a mortgage processor in Florida? No idea. All right, we're putting the hot dog conversation to rest for the time being. We're testing everybody's technology. Can everybody hear us pretty well? Everybody's, down with the kind of game plan here because we got a lot of stuff to cover. If you have questions and our team doesn't answer it, or if they're directing you somewhere because they need to show you a resource, I don't know how links work in TikTok lives, I'll be honest with you, but unfortunately, because a lot of this is stuff we're going to need to send links to. The link is in her bio, the link is in my bio, there's links everywhere, so please defer to those places. It's easier for us to sometimes, if you have deeper questions, longer questions, specific questions, send an email. That's going to be the easiest way for us to get back with you on it, all right? Pass out. I just printed out I didn't print out. I have it pulled up as a PDF, the new product. Do you want to kind of do intros, I guess, next? Yeah?
Yeah, let's do it.
Okay, you first.
Okay. Brooke Volano, and I am one of the co-founders of a company called VLG. We've been operating as Veterans Lending Group, and we are a national VA specialty lender. 90% of the loans that we close are VA loans. So the reason why I started educating about 12, 15 years ago, obviously we know our military family doesn't understand how their VA home loan benefit works, or isn't taught how the VA loan works. So we saw a huge need out in the market, and we needed to be able to provide the information. We are currently licensed in about 25 states. We just started our own mortgage company. So VLG actually transitioned from a national company, and we're stoked about that. So we just started our own company. We're in the process of licensing. We will be licensed in all 50 states, but right now it's about 25. And Ariel, I'd love to hear the states that you're licensed in as well, so that we can kind of offset each other in that way.
Oh God. North Carolina, South Carolina. I get licensed where TikTok tells me to get licensed.
Yep.
South Carolina, Florida, Georgia, Alabama, Michigan, Montana, Texas, Wisconsin, Tennessee, Kentucky. My team, I think we have a total of like 42 states, like for everybody on the team.
Yep.
But the states that I'm licensed in. So.
Okay. So yeah, we can post later on the state licensing in the chat, so that we can make sure that we got all states covered. We cover some of the states that you guys aren't in, and you cover some of the states that we're not in. So that's good.
Oh, for sure.
Yeah. And then just, my background as far as being a loan officer, I've been in the mortgage business for 22 years. My dad was a graduate of the Naval Academy and went on to fly helicopters in Vietnam for the Marines. And that was where my heart was, in the military, working with VA buyers. And 65% of our staff are prior service or military. So that's just kind of what it's what we do all day, every day.
I love your team. And it's kind of funny that we've run in the same circles for a long time. And somebody sent me your TikTok at one point, I don't know, a year and a half ago, and they're like, who is this? And so I went creeping, and I'm like, she's not wrong. She's giving everybody accurate information. That's true. Because somebody tagged me in your comments, and they were like, is this true? And I was just like, yeah, no, that's true. You're the only other content creator / VA loan specialist that I've ever met that I'm like, no, we're the same. We're equivalent.
I love that.
It was funny because, so everybody knows, last week I had a client send me a screenshot of her TikTok right after I had done my TikTok about doing this class, which is not in Michigan. It's not with the CEO of the company. Logistics kicked me in the ass on that one. But they sent me a TikTok and they were like, is she for real? And I was like, no, yeah, she's exactly for real. And then I texted it to Brooke and I was like, I feel kind of bad about this because I feel like we should do a live and be like, no, we're
totally.
We're both. She's, if anybody is as good as me as Brooke, I'll tell you that much, guys. And I don't say that because I think anybody is less as good as me, but she's run into the same amount of things that I've run into. We're currently have a veteran that wants to buy a property that has a takeout barbecue place at the bottom and a living unit on top that's zoned residential. And I'm like, yeah, we can do that. And he's like, really? I'm like, yeah, we'll get it done.
Yeah, allow for it.
So
it's the thing I love about VA. When we went to this VA conference a couple of years ago, and sitting in front of this panel of Veterans Affairs employees, and they were talking about the fact that This is a benefit that's been earned. This isn't a loan program like every other program, FHA, conventional, USDA, whatever. Those are programs. This is a benefit that the veteran has earned. And if it makes sense for the veteran and it doesn't put them in a financial hardship, we want to make it work. It's just about finding the investors and the lenders that can do that and have the same philosophy to follow those VA guidelines. So I am stoked to have found you because there's just not very many of us, like you said, out there that really know our shit. And it's one of those things, like, I don't know a lot about many things, but I do know a lot about VA loans.
Yes, same. I'm like, yeah, I don't know a lot about a lot, but I know a lot about VA. Well, it's funny because when I sent Brooke the screenshot, we were talking about the same loan product. So the same, we're going to get to how I saw somebody comment about buying land. We're going to get to it. Hold your horses. This is a class. We're going to go, there's a whole thing we got to get to with that. Anyways, so I talked about the VA OTC, and then we were texting, and then she's the one that actually got the company that we're going to talk about to get this product up and running. So all of the effort and backbone, I was wildly impressed. She's the one that's gotten the company that we're talking about today, who has the options to do barn doors, to do multi-units, to go higher on the loan amount, etc. She's the one that got them to get that project and that product off the ground, because not all lenders offer it. So most lenders are going to do VA loans. Not all lenders are going to offer the VA one-time close construction to perm loan that lets you buy land and then build on that land. She's the one that got them to get this product up and running, so it made absolute sense for us to talk about it together. So I'm just super wildly impressed too, because I thought I was stubborn and hard-headed, and you take the crown on that one.
Well, thank you. It's the only person that's ever told me it's a good thing, so I appreciate that.
I hear it's bad all the time, and I'm just like, why? So, okay, you talk about it. She's done 50 VA one-time close construction of perms. So if anybody has more experience than me, it's definitely her. So I'm going to let you just kind of like start in with the nuts and bolts, and we'll go from there.
Okay, sounds good. So, essentially the $1 million question is, I want to buy land and I want to build using my VA loan. And now there's a program that allows you to successfully, there's been some programs out there, but they haven't been super successful. Now we have an investor that is backing us up with the VA handbook and allowing you to go find land as a VA buyer, get pre-approved, find land, put it under contract, and go find your builder. Now let me walk you through the right path to do that. You don't want to go find land first and then find a builder. You really want to try and find a builder first. The very first step is to get pre-approved. So if you're interested in buying land and building a home, your first step is to get pre-approved with a lender who understands the program. And your pre-approval is going to be very typical of a normal VA pre-approval process. You're going to provide your W-2s, your LES statements if you're active, your pay stubs if you're not, your VA disability income documentation, or we get that off your COE, right? So the process is going to be about the same. The lender is going to pull your credit. We're going to evaluate your credit, make sure you credit qualify. The minimum credit score for the VA one-time close is 620. Now keep in mind, that's the VA one-time close. A regular VA loan does not have a minimum credit score requirement, but this program does because it has a higher risk to the investor. Why is there a higher risk? Because you're building out for a period of potentially 6 to 9 to 12 months. And during that period of time, the investor does not get the guarantee from the VA until the house is completed. Construction is completed and the loan is modified at the end of construction. So we're going to kind of walk through from a steps perspective so you guys can understand the process. So first thing you do is you get pre-approved. The lender is going to pre-approve you based on your maximum ceiling limit. Now that lender, if they're a good lender, they're going to be putting some cushion in there because construction loans, one-time close, take longer. They're more cumbersome. You have to find a builder. You have to get plans approved. You have to find land. You have to go through a feasibility study on the land, which is all to protect you, the veteran or the home buyer, during this process. So get pre-approved first. Then once you have your budget, then you can start discovering what it looks like to go find a piece of land in your market, because every state's different, every county is different, and they all have different feasibility requirements, meaning, you might have to do a wetland study in one county where you don't have to do that in another county. So you're going to go and you're going to get the land that you find that you like. You're going to get that for an idea of your budget, hopefully before you make an offer. If you make an offer, now the clock's ticking. And now you have to try and rush and get builders to do things and get plans. If you're working with an architect or an engineer, you have to scramble to get them to hurry up. And you guys, architects and engineers are not fast. It's not a fast process. I'm going through it myself personally right now. I've been working on plans for about 9 months. So it's just not a fun, and I'm not saying it's always 9 months. I'm slow to work with, but you know, you can go online and you can find plans that are already established. And if they're already established and created, you could possibly use those plans depending on the local authority in the area and the market that you're going to build in. So you're going to find land and just get an idea of what are you looking at for costs on land, okay? So I talked to one gentleman last week. He's looking at Texas. He's like, you know, you can usually get an acre in Texas from anywhere from $60,000 to $100,000. Okay, now he has an idea of his budget for land. Now, I would go, as a lender, I would be pre-approving you on the high side of that. So I'd probably use $100,000 for my figure so that I could make sure that it's a good estimated package so I'm not underqualifying you for what your total package is going to look like. So we're looking at $100,000 for land. Now we need to figure out what builders are out there that can build what you're looking for. Are you looking to build a barn dominium? Yes, that's available. We'll go into detail on that in a little while. Or a modular home. This particular investor is not currently doing manufactured homes with a one-time close, but they are working on bringing that program and making that available. So that will be coming down the road. It's just not currently available. Now, keep in mind, a modular home is different than a manufactured home. Modular homes are considered to be stick-built housing. Manufactured homes are not. They're two different things. So right now, we're going to put manufactured homes to the back burner because we don't have a good investor who actually performs on those very well. So we just want to maybe not take you down that path at this moment, but we are pushing to get that released.
I'm going to jump in here and I'm going to say the business unprofessional version of what she just said. Let me reiterate that. Okay. If you want to buy a manufactured home, you totally can, but fully expect that it's going to be about as much fun as baptizing a cat in a room full of sleeping babies, because the only lender that will let us do them, that is not going to cost you an extra $60,000 to do them with your VA loan, is going to take about as much time as they can possibly grant. They've contacted Father Time, got him on the hotline, and they said, I need 10 fucking years to get one of these loans done. They are tedious, they are unresponsive, they're a pain in the ass to deal with. So if you want to do it, you can. They are cheaper. But understand that it is going to take a while, and patience is, as always, key with dealing with building a house. So don't freak out when it takes a week for us to hear back on those kind of things. And you're even if it's Clayton Homes, this one particular lender is literally partnered with Clayton Homes, and they still make it take forever. It will take for fucking ever. Continue.
Great disclaimer, 1000% accurate. So obviously you can also build single family stick-built house. That's what most people are building, right? A single family home, which is, you know, usually you're looking at wood, you know, 2x4s, 2x6s. They're building it from the ground up. Now we'll talk about the multifamily option, which is now available to us through this lender. They are the only one that has the VA one-time close custom construction multifamily option that we have seen in the entire country. So, which is an incredible opportunity for you guys to invest and make money and build your portfolio and have passive income and all that shit that everybody wants to do, right?
And pause there. Sorry. Did we find out, because I had so many people ask yesterday, did we find out if it can be separate units, like separate structures, or does the multi-unit need to be all in one?
So I'm going to give you two different answers on that. We did not confirm with our investor that they recognize multi-buildings to be multifamily. However, from a code perspective and from VA's guideline and VA's guidance on that, then yeah, you can have multiple buildings where they're separated and they're considered multifamily. It's just about how they are zoned and how they're classified with your local housing authority, and then what the appraiser sees as the highest and best use of the property. So I believe the answer is going to be yes, we can do it, but then the other thing is going to be comps. You know, comparable sales. Is an appraiser going to comp it the same if it's an attached 2 to 4 or a detached 2 to 4? Like an ADU or something like that, that actually ends up becoming another unit. I have personally done those with just a regular VA loan. So I don't see why it's any different to do that on a one-time close.
I didn't either, but I was like, do we have an answer on that? Do we have a hard...
We don't have an answer, unfortunately, but we will get that and we can follow up for sure.
Okay.
Okay, so you found your land that you're potentially interested in. You've met with a builder. Now, the builder has to be VA approved, number one, which is not a difficult process. It's a handful of forms, like 4 or 5 forms they have to fill out. We send it to the local VA Regional Loan Center. They get an approval usually within 2 to 5 business days. Super simple process. The other approval is a more detailed approval, and this is to cover your ass and make sure that you're not working with a builder who's not going to pay their subcontractors, who, you know, if they don't pay your subcontractors, you end up with contractors' liens on the property, and then they could take your property back if those contractors' liens aren't paid off. So you don't want to end up in that situation. That's why they require the builder to be approved. They want to make sure their financials look decent, they have the money to pay their contractors, and they have a good reputation. So those are all things to protect you, because I've had nightmare stories of people actually getting into the build process where the builder wasn't approved and they were just paying cash for it. And I have one dude, veteran, he's actually wrong step. His name's Ryan Hendrickson. He wrote the book Tip of the Spear. He's prior service Army. He was SF. He's over in Ukraine right now doing mine removals. You might see him. He's been removed from TikTok a couple times because of his all of his mine removal stuff. But he was working with a builder who totally dropped the ball on the project. 3 years into the project, didn't finish construction. Then he died because of COVID. He got COVID and freaking died. So this guy has this house sitting there unfinished. That's one of those nightmare stories we're trying to avoid by getting builders approved and making sure they're doing their due diligence. So that's going to be the process. Are there extra steps and hoops that you have to jump through with a VA one-time close? 1,000%. This is more difficult and more cumbersome than a regular VA loan. So if this is your very first time, I highly suggest that maybe you really consider whether this is the best option for you. And once you get into budgets and you start talking to builders, you're going to get a little more realistic exposure to what you're really dealing with when you build a custom-built home. There are homes out there, there are builders out there that will build you a house and finance it themselves and then let you do the takeout on it, let you just get a regular VA loan and purchase it that way. So, you know, regardless of what is the best option for you, you have options now, and you have options to do the VA one-time close zero down. So
I'm going to add to that real quick, because this is something I think, what you just said, I think is really, really important. So what you just said was, if the builder will let you, they're going to cover financing, and you're going to just buy the house from them. If you find a builder that's going to do a plan or a barn dough, let's just say you find a barn dough builder and that particular builder says, oh, you just have to buy it outright, call us immediately if we're working with you and let us know, because that changes the loan product and a whole bunch of what the fees look like. It makes it substantially cheaper, number one, because buying with an existing home, if that builder will cover, is going to change a lot of the numbers as a benefit to you. And if the builder is willing to do it, we also want his contact information.
Yeah, absolutely.
Like
all across the country, like everywhere, wherever they are, we want to know.
Yes.
Yeah, and that's dope. If the builder's going to build a house for you, you are going to save a little bit of money there. You just have to look at the control mechanisms. You have to see, like, are they still going to let you build the house that you want with the colors that you want and the flooring and have a lighting package and have you pick and select everything? They're probably going to have a little more control over that, because I used to sell homes. I used to work with builders, and builders like, yeah, you're not going to paint that freaking wall pink in a house that I could have to take back if you don't actually close on it. So there are some stipulations there, but you've got lots of options now. So you found a piece of land, you found a builder, now you need to go under contract on the land. And the way the contract's written on the land is you have to allow for what's called like a due diligence or a feasibility study period. Now, it's going to be different in every state. It's referred to as something different. Some states don't even call it anything that has to do with construction. But you need to make sure that you're working with a real estate agent who understands this process, because real estate agents are very important in making sure that there is a smooth transaction, right? And a lot of real estate agents don't know this process. And it doesn't make them bad realtors, but as long as they're doing the research and they're going out and they're educating themselves and they're figuring out what the facts are, and they're listening to the lender who maybe has a little bit more experience and they're working together as a team, then I would say if they have a good reputation, it's okay to work with a real estate agent who hasn't done a land contract before, if they have the proper guidance from their managing brokers. If they don't, and they're just trying to throw shit together and put you under contract on land and they don't know what they're doing, you're going to end up in a worse position than if you had a really good realtor working with you. So if you need realtors, we have realtors throughout the country. We can call and vet them. We can help you make sure that you're working with people that know what they're doing. So you've got the land, you're going to write an offer on the land. You're going to put it under a feasibility study. I would suggest that you ask for at least a 60-day close from the time that you get your land, you're writing the offer, to the time that you actually close on everything. Because when you close, you're closing on the construction loan, which is also your permanent loan. So it's the one-time close. You only close on the loan one time. This is your construction and your permanent loan. So everything has to be done prior to that closing. We need to have yeah, go ahead.
I tell people I want 120 days on your land contracts. The land is not going anywhere.
Mm-hmm.
Okay? I want you guys 120 days, because we just got access to this particular product. The rates are a lot cheaper than the other construction to perm lenders. Their process is easier. let's just remember there is 235 people on this live, and God knows how many times it's been shared. I love all of you, but I do not want to run out of time to help everybody. Number one. Number two, if there runs in, I'm going to give you guys an example, actually, a very specific example of somebody that rushed a one-time close situation. I didn't do the loan, but I did get to see this play out, and you may know who I'm talking about. They cleared to close on their land after they had all their blueprints, and they didn't get a fully finished feasibility study, which is making sure the land is, like, here's what goes into that. Making sure the plans are structurally sound. That gets a review to make sure that the home that you're about to build in the area you're about to build it meets snow load requirements if it's in a state that gets a lot of snow, wind requirements if it's in a state that gets a lot of wind, hail, etc. We're checking to make sure that the plans are structurally sound. That's what goes into reviewing the blueprints. They're reviewing the builder's financials to make sure that the builder is solvent and has money to be able to pay the subcontractors and has reserves and has a good reputation, is not about to build you a shitty house. They're going to check the land. We're going to get perk tests if you're going to be putting in your own private septic. And I saw somebody talk about solar and off-grid. The VA allows for you to use solar. You can use your own propane setup. You can put in your own well and septic. You do have to have the ability to connect to city utilities if need be, but you're not required to be hooked up to city utilities. You can go completely off-grid. Just know the government's watching you anyway. No matter what you do, they can see you now. Side note, anyway, they didn't finish up their feasibility study. And the problem came in is that their land was not in a flood zone. The land next to their land was in a flood zone. And then they got halfway through starting their foundation and it flooded. And then they tried to clear it and then they couldn't get the permits to fix it because the amount of dirt they had to put to create a barrier wasn't allowed. So they had closed and were paying on a construction to perm loan for a house that could not be built, and they didn't find out about it until after they had already signed the contract. And it's real hard to back out of a 30-year agreement for a $500,000 house once you've signed for it. It's called a foreclosure. So give yourself the time to get this done right, guys. Get yourself a 120-day contract on the land. And I'm going to back up a little bit and just kind of go over one thing, because I know you talk about as fast as I do, but I want to make sure we cover this. Is how you know how much land budget you have, okay? We're going to walk through this. You get a pre-approval. The pre-approval is for $400,000. All right? Your build budget, including your oh shit fund, which is technically called your contingency fund. That's your overage in case there's any buffer that's needed. Your total build budget is $300,000. Your pre-approval's for $400,000. Your land budget is $100,000. Very simple math. That's how much you know that's your land budget. You can spend up to $100,000 on land. Okay, but you don't find that out till after we get the plans and costs from your builder, which is why the land goes last in the chain of events. Okay. Sorry to cut you. Like, let me give you.
No. All very good information. All very valid. And she's right. When you're doing the feasibility study on the land, you have to be prepared that you're going to spend some money out of pocket for those studies. Because if you have to have, like on a house that we had in Washington State, we had to have an environmental engineer come out. The county required this in order to approve our plans and complete the feasibility. So we had to have an environmental engineer come out, and they had to mark the wetlands and make sure that we weren't building. We had the setbacks that they were marking so that we could then figure out, based on the plot plan, where the house could sit and not encroach on those wetlands boundaries. And that cost us about $3,500. So the VA loan will allow you to structure the loan to where you can get that money back after closing, but you might have to pay some upfront fees. Now, that was a little bit of an expensive fee because it's Washington State and they like to charge as much as they can for everything. But it depends on where you are. So just keep in mind there's going to be potentially some expenses out of pocket along with your earnest money deposit that you'll pay on the land while you're tying up the land. Just like you would on a house, you have to still pay an earnest money deposit. So keep in mind there's a couple of those things out of pocket that you may have to spend.
Safe, sorry to cut you off again. A super safe number, a bare minimum number is $5,000, guys. Bare minimum that you need to start this whole situation is $5,000, because you're going to have, like she said, any potential feasibility study fees. You're likely going to have to pay your impact fees and your permitting fees up front and out of pocket to the state and municipality that you're buying in. I learned what impact fees were last night, and I can't believe those are a thing. Side note. An impact fee, in case anybody's wondering, is the fee that you have to pay for impacting the city with your presence, essentially. Like, you have to pay a fee to add to the population.
Not surprised.
Blows my mind. Learn something new every day. Yes, so you need to have up front, because and you can get those recouped, but you're also likely gonna have to put a deposit down when you're done, when your architect or your engineer is done rendering your blueprints. You're gonna have to pay them for those blueprints also. And those can all be recouped, but you do need to have some upfront money with this to get started. Like once we are green for go, like once we say yes, you're approved for this amount, and we get those blueprints from the builder, you need to have that money needs to be ready and available by the time your builder has provided the blueprints, because that's when the money is going to continue to come until we get to the closing table.
Absolutely. I just saw somebody fishing for comments about Veterans United. I used to work for Veterans United. I ran their office in Washington State for about 3 years, and that was a good experience. I got to understand a lot about what they do and how they do it and how not to do it with a mortgage company. And Veterans United, you know, they do a lot of things right, but they do a lot of things, they could do a lot of things much better, unfortunately, being the call center in Missouri and not necessarily really having their people trained up as loan officers. They're just, you know, they're going down a checklist. And it's the same with the credit union that a lot of people bank at that are military. It's the same with the insurance company that a lot of people bank with that are military. You know, you've got people in the call center, we call them headset jockeys. They just press a button for their next lead. And they never have to see your face, and they don't actually have to have a local reputation to get business because they just press that button and the next deal comes to them. So they really don't know half the time what they're talking about. They don't know how to fix problems when problems arise. And they don't have access to the VA one-time close program. As far as I know, neither of those 3 lenders has access. Okay. So,
no,
and I'm a little bit more politically correct about it, but Ariel, if you want to add to that.
I'm not going to say anything that could wind up in a slander case, but I am going to say I had 2 different veterans I spoke to today that one of them had a complete and total loan application submitted. They'd connected him with their realtor, and they love to do that. They want to connect you with the Veterans United realtor because then Veterans United company makes most money. And it was funny because the veteran told me, he's like, you know what, I was thinking about it. I'm like, they're just really good at marketing, aren't they? I was like, yes, that's exactly what they're good at. They are stupidly good at marketing. That's it. End of sentence, with a very large period at the end of that. They're not good at VA loans. They're not. Like, for people, like, and I think I told him very specifically, I said, there's maybe 2 loan officers that I would mess with at Veterans United that are good people. That's about it. That's about all I have to say about that. They are, I don't think there's too many redeeming qualities. If you've had a great experience with them, I am so happy and relieved, primarily relieved for you if you had a good experience with them. That's also a big feeling of mine. I don't like companies that have to use flashy advertisements, pay Google millions of dollars, and kind of bait and switch you into thinking that they're a part of the Department of Veterans Affairs to get your business. I think that's real scammy, so that's where I stand on that.
It's legit. Okay, so moving forward, you've got the land, you're under contract for feasibility. 120 days, I think, is a very good suggestion. Then if everything goes well and we can close early, of course, everybody's going to want to close early, and you can make that happen. So you get the plans back from the builder. Well, first of all, the first thing you have to do is negotiate a contract with the builder. So you're going to go into negotiations with the builder to have the builder build you this home for the price that the builder's estimating. So once the builder gets the plans, he has to go through the plans and then the spec sheet. The spec sheet is, what kind of flooring are you putting in the kitchen? What kind of flooring are you putting in the bathrooms? What is your tile budget? What is your lighting budget? What kind of siding are you using? What kind of roofing are you using? All of those things add value to the appraiser's valuation of the home. So that's why that spec list is so important. And that spec list is one of the things that takes a while as a buyer to figure out, because you don't just want to slap together your house that you're spending $500,000 plus on. You really want to figure out, like, what is it that I want? I highly recommend house.com. Obviously, everyone knows Pinterest, but house.com is very good for housing ideas, for materials, for ideas for decor. I know this is usually the women's side of the house. Oftentimes the guys are like, I don't really care. How many garage door slips do I have? How big is my garage and how big is my lot, right? But it is important that you know that you're going to have to do these things up front before the construction loan even closes. So just be prepared for that. Once you have all of those things picked out, then the builder can submit the spec sheet, and you'll submit the builder contract. The lender will submit the builder contract, the spec sheet, and the plans for approval from the builder project team. Once that approval is received, then we're going to go and order the appraisal, because the appraisal is how we determine what your future appraised value on the home is. So the appraiser is going to see the plans, the spec list. They're going to go out to the property. They're going to take pictures of the land, and they're going to complete an appraisal based on future appraised value once the house is completed. Now, this is one of the really cool things about the VA loan program is you don't have to have 2 appraisals. So even if today you build that house and your total cost of acquisition $600,000, if you get 7 or 8 months into the build and the market settles a little bit where you're building and the values come down a little bit and some of the comparable sales come down a little bit, you're not screwed on that loan having to bring a bunch of cash into the closing table like you would be on a 2-time close construction loan. So that's one of the reasons why the VA one-time close is so amazing, because you do 1 construction loan, you do 1 closing, you qualify 1 time, and you qualify prior to closing on the construction, prior to closing on that construction loan, and then the construction commences and you don't have to requalify. So the appraisal's done based off of the future appraised value. Once the appraisal's done, by that time you should be credit underwritten. We should have your conditions back. We should be working your conditions. We get the appraisal back, and that's where we finalize numbers. You know, once the appraisal comes back, you could potentially get money back from your permits and your engineering fees or anything that you paid up front if the value is in the appraisal, which oftentimes on a custom construction, the home does appraise for more. Now, on a VA transaction, oftentimes we see the house appraised for, actually on most purchase transactions, you see the house appraised for what the purchase price is. But in this case, they're looking at a total acquisition. And my experience has been oftentimes those appraisals do come back a little bit higher with the equity and the property. And they know when you're submitting what your expenses are in the total acquisition cost of that total package. Ariel, do you want to add anything to that?
No, that sums it up. Everybody always worries about appraisals, and I very rarely worry, knock on wood. So the fact you only have to get 1 is my favorite thing. Like, you said it pretty well. I'm just happy that we don't have to get 2 of them, number 1. Like, that's a huge, huge, huge boon, because markets can shift. Like, markets have shifted. If we were to compare year over year, markets have shifted drastically. And I see a bunch popping up about land. Again, I'm going to repeat this. Does Tidewater still take place on these builds? It can. That's a big part of it. And that's something that we'll touch on real quick and then figure out exactly where we are. Because I've lost track of where we are. I love where we're going, but I don't know where we are. So
you can absolutely get a Tidewater on VA one-time close. And if you do, the same process follows. The lender can still go and fight the appraised value by asking for a reconsideration of value with the regional loan center that the VA, the local regional loan center for your state. So that would be the process. If we do get a low appraisal, we would go back and we would have the regional loan center do a review of that appraisal. And really what they're reviewing is they're reviewing you guys. They're doing an online valuation, an AVM, to see what that house should be selling for and what that house should be valued for. And they can actually allow you to move forward and proceed with the transaction, even if your appraised value is less than what your total acquisition cost is, based on their approval.
You do bring money to the table in that case, though. Like, you are going to be bringing the difference of whatever it appraised at and whatever the total acquisition cost is to closing. So let's say total cost of the project is $500, it appraises for $480. You're bringing $20,000 to the table. So,
and Ariel mentioned the oh shit fund. That's your contingency fund. And I believe in this case, it's 10%. Is that correct with UWM?
I believe that is correct. Yes.
Okay. So 10% contingency. If you don't use that money, so let's say you go 5% over your budget. The money's there to cover the 5% over your budget because your tile was more expensive or you had to put more concrete on the driveway or whatever it is. Lumber prices shifted. You spent 5% more in your budget. The rest of that 5% that's in the fund saved up, and this isn't money that you have to put out of your pocket, it's money rolled into the total loan amount. So the rest of that 5% is actually refunded to you as a principal reduction at the time of modification. So you don't actually end up just paying and losing that money. That money just comes right back to you in the form of a principal reduction. And it really is just a save your ass fund so that you don't have to come up with scramble for that money or charge it on credit cards or do something like that when you're almost finished with your construction or in the middle of your construction. So it's a good thing.
Yep.
And
so,
yeah.
Well, I was to say, just to kind of like I'm always a fan of making, no offense, I'd like to break it down, Barney, and make it as basic as possible. You're financing more than you need, so you don't have to come out of pocket cash. Because once your loan is closed, it does not change. The only direction it's going is down, and that's on purpose. So your house is going to cost $360,000 to build. What we're going to tell you it's going to cost you is going to be $396,000, and that's how much you're going to finance is $396,000. In This is a VA loan. This VA loan, is this legit or is it a lie? It's a real loan. We're both loan officers. Welcome to the shit show. We are
We're just spending hours making this shit up for fun, so we can just fuck with people.
I wanted to this. Yes. I've been called. Anyways, moving on. You do finance more because we can't go back once that deed is recorded. That deed is recorded. That is now to be determined and constructed. But for this amount, we can't go back and increase. We've already gotten the appraisal at the value, so we get the budget higher. So it may not appraise. You may have to bring money to closing. It's a principal reduction. We've covered that. Let's cover real quick the difference between buying land and then if you already own land. Because I've only that so far are buying land.
Oh yeah, and we have a lot. I have been shocked how many veterans and service members have reached out. You guys own a shit ton of land in this country, and I'm really happy that you own it because, you know, obviously you're fighting to protect it, so it's good that you own some. I don't know if it's through like inheritances that you got the land or if you just found land and you just decided to pick it up, but a lot of people actually own their own land. And when you do, there's two different scenarios. You own land and you owe money on it, or you own land and you don't owe money on it, right? So there's two different situations. Typically, if you own land and you don't owe any money on it, then you could pull even more cash out of it when you go to close on the construction loan. So that is an opportunity that you have to pull some equity out of there. Let's say that you have a house outstanding, and this is going to be a whole nother conversation we'll get into detail on, but if you have a VA loan on another home that you own and you don't want to sell that home before you close on this construction loan because there's entitlement stuck in that house that you own, right? So if you own your land outright, then we can use the equity in that land to go towards the entitlement investment that you need to be able to use your VA loan up to the limit that you need to be able to use it. So keep in mind, I know that was a little confusing, keep in mind that with the Blue Water Navy bill, if you don't currently have a VA loan, you don't have a limit on how much you can build, or excuse me, how much you can purchase. Now on the build project, you have a limit of $4 million. So as long as you credit and income qualify, you can go up to $4 million if you don't have an existing VA loan. Now, the cool thing about that multifamily piece, which we're going to kind of go into detail on, you get to use income from the other units that you're building. Obviously, you have to live in it and occupy it because VA loans are owner-occupied loans, but you can use income from those other units to offset the mortgage payment, which thereby would allow you to qualify for a more expensive property. So we have people right now in like Orange County, California that are like, I want to build a multifamily for $2 million. I can rent these units out for $3,800, $4,000 a month, cash flow the shit out of a VA loan, zero down at $2 million. You guys you're not going to have an opportunity to do something like this without hundreds of thousands of dollars down, except for you have the VA loan program. So if you're in that place where you're thinking about a multifamily, obviously you need to really make sure that you're running numbers and getting pre-approved with someone who truly understands, because that is even a higher layer of confusion. They have to be able to understand what the fair market rent is going to be for that market and qualify you based on the knowledge of that fair market rent. A lot of lenders are probably not capable of going into that because it is a complicating structure and setup when you're pre-approving someone, and then you have the added layers of the VA one-time close and everything else that needs to happen. So it's a pretty incredible opportunity. But yes, there's a lot of unique things that need to happen on the front end of the VA one-time close. So 120-day closing makes a lot of sense because it gives you the time to not super stress out if things don't go as quickly as they should, because you're dealing with now a lot of different third parties. You're dealing with not only the landowner. If you don't own the land, you're dealing with a seller who's selling you the land. You're dealing with the permitting agencies. You're dealing with the architects, the engineers, the builder, and the lender. There's a lot of different moving pieces there. So if you own your own land, again, what we do is we basically cash out that land. If you owe money on it, we pay that loan off with your construction loan closing. So now you no longer owe money on that, and you just have one loan for the term of, owning that property. Hopefully you get to pay that loan off, and then you don't owe anything else. But that's how that works if you actually owe money on that land. We're going to qualify you with that mortgage being paid off and rolled into your what we call total acquisition cost. Your total acquisition cost is the cost of the land or the payoff of the land. Any improvements that need to be made, whether that's connecting to solar, drilling a well, adding septic, connecting to the city water, city gas, anything that needs to be done from a utility perspective, because sometimes land has the connections already and sometimes land is totally raw and has no work done to it. So those things are all going to factor into how the total construction acquisition cost is structured and what your total cost to build is going to look like, because it's all rolled into the cost to build. Now, does it have to be? No. If you have cash in the bank and you want to pay for those things, have at it. Pay for those things. It doesn't have to be included in the loan.
I'm going to touch on one thing that just came to my mind when we were talking about owning land. Do you have to own the land in advance? And then for people that already own the land, you can get cash back out of a transaction unless it's in Texas. Texas has the Homeowner Equity Protection Act that is specific to the state of Texas. So in every state but Texas, if you already own the land and you want to get some of your equity out by rolling it in and using that as an equity position, you can, not in Texas. That's the only. So Texas is they're real weird about cash out refinances. Don't ask me why, but they're like, no cash to anybody from the equity. And that's the TLDR on that.
It's part of the state constitution, and we're actually working on that with some of the local government agencies. We're trying to get some sort of opening up for that for our veteran community, because there's a lot of folks that want to be able to do a cash out refinance that puts them in a better financial position. Maybe they don't allow you to go to 90% or 100% loan to value, but you still have the ability to do a cash out refinance. So thank you for mentioning that. We totally was not thinking about Texas, even though we do so many of our custom construction transactions in Texas. So,
well, and I see somebody saying crying in Texas right now. You can still buy and build with your VA loan. Still buy the land with the Texas Land Board loan. If you own land free and clear, the only thing you cannot do that is different from everybody else is you cannot get extra cash back out. That is literally the only difference. So,
but if I'm thinking about it from a creative perspective, you could file a lien on the property and pay the lien off.
I love you. Because that's a great idea.
I mean, there's ways to get around a lot of things and still be legal. It's just a matter of doing it the right way. So.
It's creative thinking. It's one of those, okay, I can't do it this way, but you didn't say I couldn't do it that way, which is
I don't like no. You don't like no. That's why we do what we do.
No, it's just, it's only a no until it becomes a yes. And it's a matter of, can I get to the yes and still be able to sleep at night? Probably.
That's right.
95 to 99 chance, yeah. If it's something that's super sketch, I'm just no, please don't bring the sketch here.
Am I going to lose my license? No. Is this right for you guys? Yes. Does it make sense? Yes. We let you make the decision. But that's an option. You could do something like that.
What if you don't land? So let me pause real quick here, guys, because we've got we've jumped between 300 and 400 people on this. We are licensed in a shit ton of states between the two of us. Go to the profiles. This is the VALoanBish, Brooke VALano. My name's Ariel. I'm the one damn ginger, the VA loan lady. You can go to either one of our profiles. All the links to set up times to talk with us are located in our bios, as well as our states. Our teams are in the comments. If you're new to the live, joining in, yes, this is being recorded. Yes, it will be on YouTube. It will take me about 3 hours to extrapolate this. It will be on both of our YouTube channels. So if you are not going to catch the whole thing, if you have missed parts or points of it, please do not worry. This will be on YouTube. It's probably not going to be super high quality because technology defeats me every single time. But we're going to briefly interject here. Continue. Sorry. I see it
how to do all that.
Recorded? Yes. I don't know how to pin a comment or else I'd pin that comment.
Oh, God. So yeah, that, the land, owning the land already, there is some, seasoning requirements to use certain values on the land and crediting towards, things if you need the value, but I won't go into super detail on that right now because honestly, I don't have the matrix in front of me.
I do, but the long story short is you need to have the land in your name at least 6 months to 12 months. Otherwise, we can't give the value, the full value to the land. So let's say you got gifted land and it's worth $100,000. But the bill of sale for the gift or whatever is 50. We have to use 50 instead of 100. So just make sure if you already own land, you've owned it for at least 6 months to a year. That's the long story short there, because it can change the rules. The rules say that if the land is newly acquired, We have to use the most conservative method for valuing that land as a part of the whole deal.
Got it. Yep. Thank you. didn't read that portion yet.
You're good. I think I sent it over to. I don't know if I sent it over to you guys. I'm gonna send it. I have the whole thing now, like from UWM, like the long form, because the class we had to take to be able to offer you guys this loan, it was a great overview. Then we got the actual like handbook, like instructions on this, because the VA has their instructions, and I love the VA so much for sometimes I love the VA so much because they'll do things like their instructions for how we are supposed to do these loans for you guys is literally 4 pages and 14 bullet points. Do this, do this, do this, don't do this. And it's really funny. Newly acquired is anything less than 12 months. We'll just make it easy. Newly acquired is anything less than 12 months.
So kind of to quick bullet points for those of you that recently joined. You get pre-approved, minimum 620 credit score, maximum build and loan amount of $4 million, zero down up to $4 million, which is freaking insane for a VA one-time close because the last lender I was working with was 10% down over 1.5 and capped at $2 million. So to be able to go to $4 million is pretty incredible. A lot of people are saying like, I could never qualify for $4 million, but you would be surprised, especially if you're rolling into the multifamily world where you're using income, rental income from the units that you're going to be renting out. And incredible investment because multifamily is a long-term, real estate is a long-term investment and real estate has appreciated better than any other investment and they're not making more land and the cost to build just keeps going up. So you guys, it makes sense to invest in real estate, especially in an inflationary market because it's a way to hedge against inflation. So,
well, I'm gonna jump in. I saw a comment. Somebody said that they were afraid to get into the rental market. I'm going to give you the insider tip on the best practices for like easing into being a landlord because you should absolutely be house hacking with your VA loan. Let's just go over some real quick data points. VA disability is capped at $4,000 a month. Pension is going to be capped at like maybe $2,900 a month, and that's before they take out taxes on that, and the cost of living is only going up. Realistically, especially if you have a family, you will need more income in retirement. You don't want to rely on just those things. So let's look at the easy way to dip your toe in. If you're wanting to build and you want to look at doing a multifamily, then here is what I would recommend. Start with a 2-unit. Get something that's going to be maybe 300, 350 total. You're not going to be building in a super high metro area, or you're going to be building in a state that does not have you're not building in New York City and getting 300. If you're in a state that has a super high purchase price or medium purchase price, California, Colorado, Utah, New York, Massachusetts, any one of the high populated states, you should do this near a college town if you can, but not in a super high populous area, and then build a 2-unit or build a single family with an accessory dwelling unit, which is not considered a multi-unit, by the way, guys, at least not for most states. An accessory dwelling unit is a unit or it's essentially like a tiny house in a regular size house. So imagine if you converted the she shed into a livable space. Like literally imagine that you converted your she shed into a livable space with a bathroom and a small kitchen. Now you're going to get a taste for being a landlord without necessarily having to change your zoning, without having to get approved for a multi-unit, and they can be less expensive to do it that way. If you go full-blown multi-unit, number one, it can be more expensive. Number two, it might be harder for the home to appraise because not only do we now have to appraise a custom-built home, but we also have to appraise the rental value of the other unit that you are going to be renting. You can qualify with the rental income. We will need to get a special appraisal report to tell us what the market rent for that other unit is going to be, and you're going to need to sign an agreement with a property management company to manage that other rental. Now, that being said, when you have a property management company managing your rental, that means that they're doing the background checks and the credit report checks and all the checks for the tenant that's going to be living in there, and they're also taking 25% of your money. It's a great option to protect yourself. Super great option. If you want to go I want to try renting by myself, I would say try with an ADU because push comes to shove, you have a smaller residence on property. Or if you're doing, if you want to build a farm and you need somewhere where you might have people staying, it's a great option to start with an ADU versus going full-blown multifamily. Where you might have people staying. It's a great option to start with an ADU versus going full-blown multifamily. Where you might have people staying. It's a great option to start with an ADU versus going full-blown multifamily. Where you might have people staying. It's a great option to start with an ADU versus going full-blown multifamily. Okay. Okay. All right, we broke it.
I'm gonna log out and log back in.
Good plan. Oops. Why does it keep doing that? Like it did that yesterday. That drives me nuts. All right, well, while we're waiting on her to join back in, no, you cannot use the VA loan up to $4 million. Let me explain VA entitlement real quick to you guys so you understand how that works. Okay, so if you've never used it, no cap. There's no maximum on your VA loan if you have never used it and you are not currently charged to it. If you have used it, if you've swiped that VA benefit, like a credit card, you've swiped your VA benefit, you've charged $100,000 to it. Now there is a cap in place on that benefit, which is the conforming loan limit. This year, that is $726,200. So you would minus out the $100 you had already spent. Now you have $626,200. So your eligibility limit for the amount that you are eligible to finance with no down payment, not qualified. You're eligible to finance $626,200 with no down payment. If you go above that, you're going to trigger the VA rules for down payment. I know it's not considered commercial to do multi-unit. Sorry.
So yeah, back to your ADU idea. And also, if you're looking to get into the vacation rental or the Airbnb market, if you had an ADU and you could be on site kind of managing that project, especially if you had acreage and like, you know, you're seeing a lot of really cute tiny homes and other things that are ADUs. I wouldn't say tiny homes so much, but like a separate building that is built very affordably. You can do things like that for sure. And I have a couple of vacation rentals. I love the business. There's a lot of tax loopholes that you get with a short-term rental that you don't get with a long-term rental. I saved an additional $60,000 one year having a short-term rental versus having a long-term rental. So there's a lot of value in that. We could do like a class with a CPA one day to talk about the Airbnb side of this world, because we've got a lot of tips and tricks on that as well. But it's a good way to get started is having an ADU.
This is a perfect opportunity for us to jump into a topic that I saw a lot in the comment section too, which is, can I build a shop? Can I build a barn? Can I build this along with my house? Can I build...
Yeah.
You can essentially pick this. You can pick doing a multi-unit, or you can pick a property, primary residence, and like one extra structure that can be included in the cost. You can't do 16 extra things that are going to be all farm. That's complicated, and farm income is very much so different on a VA loan than regular qualifying income or rental income. But you can pick a house and a extra building. So an accessory dwelling unit. You can build a large shop that is a detached shop. You can technically build the exterior of a farm building that could house animals, but it cannot, like, you can't build the pens, and you cannot build the, I'm not good at farm knowledge, I've not watched Yellowstone recently, the holding pens with the things. Is it just holding pens?
Tackle barn? I don't know what you mean.
It's been a long time.
The pig pen? Is that the pig pen? I don't know. I grew up in Montana. Actually,
paddock. Thank you.
I should know this.
Paddock. It's called a paddock.
A paddock. There it is. Stables, stalls, paddocks. Yeah, these people know. A chute.
Thank you guys.
Corral. Oh my God, you guys are such good farmers or ranchers.
So you can build one large extra unit along with your primary residence, but the units or the structures you would need above and beyond the one extra, you are not going to be allowed to finance in. Now, I will say this is, if you need an SBA loan, which is a VA, Small Business Administration loan, you can do one of those up to $300,000. And I've already had this conversation for another veteran. So if you're doing farm, you can do an SBA loan up to $300,000. You are going to need business plans, and you are going to need prior ranching experience if you're going to need to continue to put structures on there. That's for those real hardcore farm people. If you're just homesteading and you want chickens and goats and tiny cows, you're going to have to put that up yourself for those paddocks.
But if you're going zero down on a custom construction loan, you should have, you know, there's money left over, hopefully, to be able to put those outbuildings up fairly affordably. And yeah, I think, you know, moving into that, another topic is acreage. Is there a maximum amount of acreage you can have? And no, there's not with this VA one-time close. A lot of lenders are going to cap your acreage because they don't want your land to be worth more than your house. But this program doesn't care how many acres you have. So if you want 50 acres, go for it. If you want 100 acres, go for it. Now, comparable sales, we still have to find comparable sales that support the value. So you don't want to overpay too much for the land, because when you go to get comps, you never get the value out of land that you think you're going to get. And if they have the only comps are out there with 20 acres, but you're doing 100 acres, you're probably not going to get that much more for the 100 acres. But you can absolutely do it with the VA one-time close and finance it. So that's not a problem.
Container.
Just saw that.
You can do a container home. I don't know if you can do it with this particular lender yet. I know we can do them with click and close, and it will absolutely be a torturous process. But that is one question I forgot to send you earlier. I'm like, can we find out if they'll let us do container homes with this? Because I know click and close will, but click and close is another lender we work with. They are very expensive. The reason we're talking about this is because we are immediately cutting anywhere from $30,000 to $40,000 off the out-of-pocket costs with this lender's product. Costs are substantially better on this one. So as many people as we can have this particular do their loan for is better. Because unless you really, 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 really are dead set on a container home, if this lender doesn't say yes, it's going to cost you an extra $40,000 out of pocket to do that, and your rate's going to be worse.
The other thing I like about this program is it has that automatic float down.
Yes.
At the time of modification. So once the construction is completed, whatever rate you lock into, you're locking into prior to the construction loan closing, and it is your 30-year fixed rate. So that's the cool thing. You get to lock that in. But let's say the market continues to improve, which we are anticipating at least for the next few months that we're going to see some market improvement. We should long-term see some market improvement. Average, might be 5 to 6% in the future, but depending on what happens in the world, it could go down. It could drop again based on what the government needs to do to infuse money. I mean, it's a crystal ball. You can't anticipate what's going to happen. Everyone projected that we'd be back in the 3s at the end of last year, and that didn't happen. So just know that if the market does improve between now and when you close on your mortgage and when you finish the construction, then there's an automatic float down to a lower interest rate, which is an incredible thing that you don't have to pay for that, and you don't have to refinance and gain the costs or expenses that you would have to pay to refinance.
It blew my mind that they're offering that, and I was like, are you guys, because I remember the pricing came out, and I went and I pulled rates, and I'm sitting looking at the rates going, this is really, really aggressive for
Insane.
a perm. And just to give everybody construction of perm, if you go through a credit union, is going to be somewhere between 8 to 10%.
And 2 to 3 points typically for your fees.
Yes. And we pulled rates that were in the 7s with no points. There was rates in the 7s with lender credits. And I'm like, are you serious? Are we for real? This is nice. I'm a fan. So
it's an awesome program. I'm hoping that a ton of people take advantage of it. And I think that already we've seen a lot of applications coming in. And so far the process is smooth. Now, we are guinea pigging the first group of people going through this program. So you just have to know
all of you
we're
guys.
going to, and we're going to make sure that, we've got more knowledge and experience because we've done these programs before. So we're going to be able to troubleshoot things. But that's why we always tell people, hey, this VA one-time close, it's more cumbersome. It's more work for you. You have to jump through more hoops. And as long as you know that, and we set proper expectations with you about the closing timeline, then it should still be a smooth process.
Yep. And hello, everybody, for that new here. So brief recap. We are talking about the VA one-time close construction of perm. She and I are both brokers. We cover almost the entire country between the two of us. We're not co-workers, but we're besties on TikTok now, faux show. We are talking about doing your VA one-time close construction of perm, building with your VA loan, how to do it, what kind of homes are covered. Yes, this will be on YouTube. The best way to get in contact with us is through the links in our respective bios, please and thank you. Just so everybody's got the quick recap on that. And if you want to get it, we're both here just what TikTok? Hi, Jeffrey. We're both here just talking about it because this is a fairly new product that we have access to, with the access to building a multi-unit with your VA, building a barn-dough with your VA. I think we should touch on barn-doughs and tiny homes next and talk about that a little bit, but we're just here to talk about what you can do with your VA loan. So
barn-dough restrictions, from what I understand and from what the VA typically requires, is when you're looking at the barn-dough, you don't want the shop to be larger than the square footage of the home. So that is usually going to be an issue for the appraiser, because obviously then you're building more of a shop than you're building a home. So make sure the square footage is less on your shop than it is on your home. And also Be careful with businesses inside the shop. So if you're running a business out of the shop, they probably aren't going to like that. So we don't want that in the file anywhere disclosed that you're going to do that. So just don't say anything. Yeah,
We're excited.
we don't.
Don't tell us about it. We don't want to know about it till after closing. Invite us to the housewarming party.
100%. But the barn dominiums, I mean, these barn dominiums are not barn dominiums anymore. These things are amazing. I've seen a couple of builders that are building barn dominiums, and the houses, the construction is still very similar to stick-built homes. And so that's the thing. There's a range of barn dominium construction. You know, there's pole barn construction, there's steel framing, there's steel siding, and then there's just wood framing, wood siding barn dominium. So I think it's a loose term that's being used right now, and I think it's really about figuring out, digging in and really figuring out, what am I trying to build, and what's the builder putting in there for the spec list, what is the spec sheet for siding and framing and everything else. And VA is typically, you know, the biggest concerns with VA are that you're going to be able to find comps, comparable sales for the appraisal process. That's going to be a challenge if you're using a unique construction type. We had somebody send us like a picture of a yurt, and they wanted to build that to make it a Airbnb, and it was like a tent, and you know, it was a really nice tent.
Somebody was literally in my comments last night asking about a yurt. Oh my god,
it was amazing. It was gorgeous, but you know, like, I get, it's hard to know if you're not in the industry, you know, going through these scenarios all day long. It's hard to know what is considered construction and residential and what's not, and how does that work. So don't be afraid to ask questions. 3D built homes. That came up. I got that question. I actually called the VA, and the VA said, well, there's nothing that says that we can't do it. You're just going to have to find comparable sales. So as we see more 3D, what is it, 3D homes, 3D printed homes.
Which RLC did you talk to? Because I also called the RLC, and they said that especially if it's in Florida, because Florida already has so many concrete homes, that you just compare it to a concrete, like, cinder block.
That makes total sense, because that's essentially what it is. I mean, it's just...
It's done this way instead of, like, Legos.
Yeah. That it wasn't St. Petersburg. It was Denver RLC, because they became my favorite. Andrew in the appraisal evaluation department. If you're watching this, we love you. But yeah, it's that makes total sense. So if you're in a place where there are concrete cinder block homes that you can use as comparable sales, then you shouldn't have any problems with a 3D printed.
And somebody just asked, what if there are not barn door comps in the area? Let me clear up what she just said. For a barn dominium, it is based on the materials used to build that home, and it is based on how many square feet and bedrooms. And again, your actual garage space cannot be bigger than your living space. But I have it in writing from the VA that says this is compared to a single family residence. It is not like, don't think of it like it's a different kind of structure other than a single family residence. You have a single family residence, you have a townhouse, you have a condo, you have a manufactured home. Those are essentially the four, like the nuts and bolts, four types of home that come like in our little checklist. It can be one of those normally, or it's like a farm, or it's land. It's in the single family residence box. So as long as you can find a home that has similar build materials and similar square footage and similar bedroom count, it would be appraised and compared to another single family home. It is not a barndo. Barndo is a style of home. It's still a home.
One of the things. Oh, you want to talk about tiny homes a little bit?
Tiny homes are modulars, guys. Yep. So, and I'm really excited about that. I'm actually super, super excited about that because I've been talking to a couple of different tiny home vendors, and you can get a turnkey tiny home. Tiny home. It's 1,200 square feet, which I don't really think is tiny. Like, to me, that's just a modular, but it is classified as tiny, I guess, for whatever reason. And that is considered a modular home. And to kind of get into the differences on those, you have a stick built, which is built on site. Then you have a modular, which is built over here and then put on site. And then you have a manufactured home, which starts off technically as a vehicle and still has wheels and axles when they put the home on the foundation. So breakdown of those three, very, very simple. Built here, built over there, and brought here. That's what a tiny home is. And it's the same. Now, tiny homes, true tiny homes, are typically going to be more expensive than doing a manufactured home because there are a whole extra set of costs that go into placing that home on a permanent foundation and turning it into what would have been a double wide and now making it into a home. They're all homes, but it's a matter of whether or not they are attached to a permanent foundation, whether or not they had to be built offsite, etc., whether or not they still have the ability to be moved. Technically, you can move a manufactured home after it's placed on the permanent foundation. It's not necessarily 100% permanent. But a tiny home, you would not be able to move off of that permanent foundation. They were going to affix it to the permanent foundation, and it's a modular at that point. But they are cheaper, and UWM will let us do them, so I'm really excited.
Quick question on that. The tiny homes, they don't come titled as personal property and have to do real estate
There's no
elimination.
Yeah, so there's no affidavit of affixture, there's no retiring.
Okay.
They are considered modular for all intents and purposes. Now, going back to the cost on those, you want to budget roughly. I was talking to Clayton Homes actually the other day about this, and I was like, break down, talk to me like I'm stupid about this. Tell me the difference between a manufacturer and a modular from a cost perspective. And it is roughly $50,000 to $50,000, and it's primarily because of the crane. I don't know if anybody's ever seen a home get placed. They literally use a gigantic crane and pick it up and put it on there. It's kind of cool.
It's very cool. And honestly, I think a lot of other countries, I was watching a modular home being built I think it was 10, 15 years ago on Facebook or something in Japan. And it is very common in a lot of other parts of the world to use modular building construction type or construction processes to build. So modular are typically a little bit more expensive, right? And are seen the same as a stick-built house. Whereas manufactured homes, because they have to eliminate the title and they're built in a factory, 100% built in a factory, and just the marriage line is adjoined, whether it's a double wide or a triple wide, and then their title eliminated once they're placed and affixed on a permanent foundation.
Yep. So. I like the tiny home because aside from they're the one vendor that I was looking at, there's Sunshine Spark, I think, on TikTok. They've got a TikTok. And they're one of their less expensive models, I think, is 600 to 700 square foot, and it's $60,000, and that's trimming everything out the door, including appliances. Yeah. So if we include, let's say, $60,000 for the house, $40,000 for site prep and or $40,000 for placing, another $20,000 to $30,000 for site prep, and we'll segue after this and kind of get into what's all included, what costs you should intend to include. I'm tired. What costs you should budget for and how those break out. LifeSpark Homes. Thank you.
LifeSpark Homes. That's incredible. And I mean, there's your affordable housing. We've been having affordability issues in this country with housing. And a lot of people, we went bigger and bigger and bigger on construction. And if you can afford it and you want it, then go for it. But if you're really looking to not be house poor and to really, be able to have that travel budget and potentially to have an Airbnb later on down the road, you could have multiple of those homes and start building your Airbnb business around the world, really around the country starting. And then when you can fund it, cash, pulling out equity out of your homes and financing it into places like Costa Rica and I mean, wherever you want to be, honestly, you have the ability to do that. So
when you could house hack, you could do, by the time you get to house number 4, because every year, guys, they raise the conforming loan limit, which then in turn raises the amount that you're allowed to finance with your VA with no down payment. So the cap this year is $726,200. So let's say you wanted to build yourself an investment portfolio, build a tiny house, $200,000 out the door, 60 for the house, 40 to place it, 30 for prepping and clearing the land, and then another 70 for your land budget. $200,000. Live in the house, work, buy another house, do the exact same thing. You could do 4 houses in 4 years that way if you really, really pushed it and moved quickly and put your nose to the grindstone on that. And then you have 4 different Airbnbs if you really technically you need a place for you to stay at that point. Now you got 4 different options. You could buy and then immediately start planning to build the next one. Because the way it works for the VA loan too, just so you guys have a heads up, you buy house number 1. Let's say you're building 4 tiny homes. You're building yourself a little Airbnb investment portfolio. You build house number 1, you live in it, we qualify you with all of your regular and plain income as it sits. You're getting ready to build house number 2, you just closed on house number 1. We're going to get to use the rental income from the house that you're about to leave to offset the mortgage payment on house number 1. Now, you still want to claim it on taxes immediately once you've started using it as an investment property because you will need it to start qualifying later on down the road and show that rental income on tax returns. But the nice thing is it's called a Schedule E. You put all of your rentals on a Schedule E. You also get to deduct a shit ton of stuff. Taxes, insurance, your mortgage interest gets deducted, any expenses for the property management, but then we get to add it back for usable income on your VA loan. So you don't have to tax it and we get to use it. It's the best of both worlds. Sorry, there's some tax
hacking as well, which I am determined to figure out how to be tax free at some point. So
Eventually. Okay.
Another cool feature about the VA one-time close is you do not have to make construction payments. You're actually not allowed to make construction payments during construction. So I did confirm this. There's no construction payments during construction, meaning you're not paying the interest payments on the drawn amount of the construction loan because the money is released to the builder in draws. So you start off with the first draw. That could pay off your land if you own, or if you own land and you owe something on it to another lender, that's going to pay off the land. If you're buying land, that's going to pay off the seller. Now you're the owner of that land. That's included in your first draw. And then in the first draw is also money for the builder to start construction. Then once the builder gets through that first phase of construction, they do a construction inspection, they sign off on it, and they release the next draw. So you're going to have multiple draws through the construction phase. Well, typically on a regular construction loan, you're making payments, interest-only payments on the construction balance that's been drawn while you're building the house, not living in the house, having to make payments on an apartment, a house, potentially an RV if you're living on site in the RV, fifth wheel, whatever. You still have a housing expense. So a lot of people worry, I can't afford to pay 2 housing expenses while I'm building a home. Well, this is the solution to that. It gets included in a fee. So it is financed into the transaction, but you don't have to make those payments out of pocket. It's included in a fee, and every month the money's taken out of the escrow account to pay your interest-only payments on that construction loan until that construction's completed. The note is modified to the remaining term of whatever remains after the construction's complete. Once to build, your remaining term is going to be 29 years, 3 months that's left on your 30-year fixed regular VA mortgage. So that's kind of how the financing, construction, loan, and interest side of things work. But cool thing is you don't have to make payments, and they're even including the taxes and insurance in that escrow account, so you don't have to make those payments out of pocket as well. A lot of questions on, I have a house with a VA loan right now. How do I do this? How do I move forward? What are my options? So obviously, option A is you sell your house prior to closing on the construction loan. So if you need to sell it in order to qualify, then you sell your house and you live in temporary housing while you're building the home. You can live in an RV on site, you can live in a fifth wheel, which is nice because you get to also watch your construction materials. I don't know how many times you guys have heard of construction materials being stolen from a construction site, but that is a fairly common experience. If you don't have things locked up, they could be stolen. So living on site would allow you to be able to watch the house and not have things taken off the property because you're like your own, securities. The other option is, what's that, Ariel?
It never dawned on me that people steal stuff from construction sites, and I don't know,
They're
sorry.
assholes. People are assholes.
I've hidden about $3,000 worth of illegal fireworks in a new construction house. I don't think I've ever stolen anything off site. So.
Did you blow them up on site at the construction house?
Huh?
Did you blow them up on site at the construction house, or you took them to your house?
No, there was a house that we were at, and the house next door was being built, and we needed to hide the fireworks because the police were coming. So we just put them in the new build because they weren't going to go look. We're getting off topic. Let's get back on topic.
Totally makes sense. So yeah, construction materials, I would make sure that you have that conversation with your builder. How are you protecting the construction materials if you're not living on site? Because it is a conversation that, that shit happens and it sucks when it happens. So, but yeah, you need to qualify, you need to have your house sold, you need your entitlement release. Sometimes that's the issue as well. And this is one of the reasons why it's so important to get pre-approved, to have a lender pull your certificate of eligibility, look and see exactly what you have connected to your current VA loan, and then we can guide you. Hey, yeah, you have the ability to turn that into a rental property, live in it. You can qualify with both mortgage payments, the new house and that existing mortgage. Or you can turn that into a rental property, move out, get a lease on it, and that's a departure residence. That would be considered then at that point a departure residence and allow you to qualify, offsetting that mortgage payment on that house, again, as long as you don't need that entitlement to build what you're needing to build. So lower price points, you probably won't if you didn't spend a lot of money on your first home. But if you start getting into some of those upper price points, then you're likely going to need to release your entitlement. There's one other option, and that's a one-time restoration, literally allowed to be used one time in the history of using your VA loan. The one-time restoration allows you to refinance your VA loan into a conventional loan, and do request a one-time restoration, basically a release of your VA loan entitlement without having to sell your house. Because the way that the release of the entitlement typically works is that there is a transfer of sale. So you're selling your home, and when the transfer of sale occurs, that's when your VA loan entitlement is released. If we're refinancing it with a conventional loan, that's not a transfer of sale, that's just a refinance. So you can only do that one time. The VA gives you one time to do that. So that is an option. If you have a VA loan, but you need the entitlement from that house, but you want to keep that house and turn it into a rental property, my suggestion is that you then do a conventional refinance, release that entitlement, do the one-time restoration, and now you're whole with your entitlement, and you can use 100% of the entitlement, meaning now you've got no county cap. You just have the $4 million VA one-time close loan cap. Did I explain that to where it makes sense?
I thought it made plenty of sense. I'm seeing a lot of comments and I'm seeing a lot of interesting suggestions. I see that somebody has said sell your home to an LLC. Guys, follow the instructions. Those are very clear and very simple instructions. Please do not get yourself tied up with any kind of potential fraud. If you are holding title to the LLC and you try to sell the home to yourself, do you think the VA is not going to figure that out? You know LLCs are public record, right? Okay, like, we will both push the rules, but let's not get yourself in trouble. If you really, really want to do it, sell the house to your brother or your sister or dad or mom. They need to take out their own financing on it. I did see somebody mention a renter. So if you have a renter that's going to take over and you don't need that entitlement, let's say, again, you bought a house near base. Most houses near base, at least on the East Coast side of things, about 200 grand is pretty typical, especially around Cherry Point, Fort Bragg area for a small starter home. You're going to rent that out? Cool. What we're going to need is an executed lease. And you can't be living in it if the lease is going to be starting, but we can't count it as a rented property until it's being rented. And if you need somewhere to live while you're building, we're going to still have to calculate in the mortgage plus the offset of the rent. And then we still are subject to what you are eligible for, what your remaining entitlement has allowed you to be eligible for without a down payment. That or start saving up some money. Now remember, all the money that you put into the transaction that we told you that you needed to have, minimum of $5,000, minimum, that money does count towards the transaction. So if you're buying a property or building a property, and let's say the spread between what you're eligible to finance at no dollars down compared to what you have to bring to the table is $10,000. I did this with somebody last night. Eligible for like 550 ballpark, they wanted to build 600. That difference of 50,000, you have to bring 25% of 50,000 as your down payment. The VA loves their 25% metrics for some reason. So if the maximum amount that you're eligible to finance with no down payment is 550, you're building at 600, you're going to need to bring, what is that, $9,000 as a down payment? Is that the right math? Somebody
I was reading comments. I'm sorry, I wasn't tracking.
You're good. All right, that's not right. $12,000 would be the down payment that you would need to bring if you are not restoring entitlement and you're maintaining that residence. And again, let's assume it was $50,000. It's 25% of whatever the difference is between what you're eligible for with no down payment and the purchase price. I know that probably didn't even make. This is where entitlement math always really screws people up because it's very, very weird. I normally bring bar napkins or coasters whenever I do these classes in person, and I'm like, let's do this on a bar napkin because then it makes a lot more sense. Minus, minus, minus.
Write it out. Well, and I know I'm seeing some questions on if you do the one-time restoration, can I keep my interest rate, my current interest rate? No, it's a refinance. So when you do the one-time restoration, you're actually refinancing your note into a completely different mortgage note, and you're going to take whatever current market is. So that's the downside of doing the one-time restoration. If you have a 2.5% or 2.75 or a 3.5% rate, probably doesn't make sense to do the one-time restoration. And an assumption, which is a whole nother live video, an assumption only releases your VA entitlement if the person that's assuming your mortgage is a veteran and qualifies, or active duty service member and has their own entitlement and qualifies to assume the mortgage with the VA loan. And, then you have the issue of how long assumptions take to process and other things. But yes, that could potentially be an option as well.
But if you're going to get your entitlement back, like the goal is to get your VA benefit back, you have to not only have them assume the loan, but they also have to fill out the institution of entitlement paperwork. Because you can have a civilian assume your VA loan from you, that entitlement is gone forever if another veteran who doesn't have the benefit can't say, here's my entitlement, I'm going to take your entitlement, we're going to just play swapskis, okay? That's what you're doing when you're assuming a loan and then substituting entitlement, okay? Let's see what else. I think, hang on, let me pull up the email for our itinerary. Do you want to just dive into Q&A? I feel like we've covered it front to back pretty well.
Yeah, lower fees, better rates. We talked about that, the process. I mean, there's just a lot of one-offs with this program. And this is where a conversation to just have, let's dive in on like, what market are you in? What are you looking at for a potential purchase price? What's your scenario? What are your concerns? And this is where that one-on-one consultation makes a lot of sense, is if you're really interested in this, then moving forward for the one-on-one consultation would be your best case scenario. But yeah, Q&A.
Projected rental income required for the $4 million cap. That is
automated approval. So, right, you could be, if you have super high credit, my phone's right here. I was looking for my freaking phone so I could find my calculator. My phone's right here. But, I mean, a $4 million mortgage payment. So you have mortgage calc right now?
I love that. Well,
it depends on the market because taxes are going to vary for a $4 million property. Haley, go to mortgage calc, go to mortgage calc on Google. Just Google mortgage calc. Well, you guys can also do this at home. Follow along.
Yeah, you do that real quick.
Or you can go to...
I'm going to answer this other question real quick that I saw that actually we have not touched on. You cannot combine entitlement benefits on this. It's actually very specifically... So one veteran's entitlement gets used. No splitting entitlement. So if you have two veterans on the loan, that's totally cool. That's totally fine. Let's say it's two married veterans. We are using all of one person's entitlement or all of the other person's entitlement. We are not mixing the two. Now you'll have all of the party number two, veteran number one, we're using all of theirs. Veteran number two is still going to have full entitlement available. That loan, if they are on the loan, is just going to count in their debt to income ratio. But you still have full entitlement available if we are not using it for this particular loan.
Okay, so I've got kind of some rough figures. These are super rough because, a lot of unknowns. But $4 million VA mortgage payments based off of an interest rate of, I don't know, let's go 7% on the VA one-time close, $26,612 a month for your monthly mortgage payment. Don't let that panic you or spook you, because the rental property at a $4 million build would likely be a fairly expensive mortgage payment. Or rent payment. I would estimate, and this is a total crapshoot, let's just say it's $5,500, $6,000 per unit. Now you're looking at rental income of $24,000 minus your unit, because you're going to have to cash flow your unit or pay for your unit, $18,000 a month, let's say. But it depends on the market that you're in. I mean, you got to look and figure out, if I build for $4 million, what are my unit sizes? And then you got to go do the research and figure out, through a real estate agent or through property management companies or through hotpads.com or something like that, Zillow Rent, you got to go figure out how much is that rent for a property of that type in that market. I mean, $4 million build, are you talking about California? Are you talking about a market where it's pretty expensive? Then you're probably getting $7,000, $8,000 a month per unit, depending on how you build it out. But $4 million is a lot. It depends on the land. What's the land value? $1 million for the land purchase? $500,000? So there's just too many unknowns to really run those numbers super well. And then you have to look at what rental income can you use to offset each unit. So if a rental market analysis would support $7,000 a month per unit, then you're offsetting that much. Well, it's probably 75%, right? There's a 25% vacancy factor, I would imagine. So there's just so much math that goes into it to figure out like approximately how much income would you have to make to qualify for a $4 million. But we can run the numbers if we actually know more about what would you be building, what are the rents in that market, what is the payment, what are the taxes and the insurance and everything else in that market, to really determine how much would you then reverse engineer it to determine how much income would you have to make to be able to qualify for that payment. So I just confused the shit out of everybody I know.
So what she said was the TLDR is so hyper market specific. Like, you can do it, but you best believe now we're going to be asking you for 6 months instead of 4 months on that land contract. Yeah. The TLDR, it's going to take a lot of planning. Planning to do a multi-unit is something you plan to do. You don't fall into that by accident. So we're going to repeat this one more time. Both of us have links in our bio to schedule one-on-ones. Everybody's situation, like, you can do it. Understand that whenever you schedule a barn door consult or a VA one-time close consult, you better have an hour and a pen. You need an hour. I need an hour worth of your time, because if you've seen this, you're still going to have more questions. It's going to take us an hour to go through all those questions. And then we need to customize, and we have to look at whether or not we can do in your area what you want to do. Like, it does take a lot of very detailed planning, and I go back to beating the dead horse of patience is key, because we can do it. It takes some time. Building a multi-unit, you need to definitely have a realtor on board, and the realtor needs to be prepared to not only help you find comps for rentals, what the square footage on those rentals is, what the estimated rental value is, because when we order the appraisal, again, the appraiser is also going to have to look and see what those rental values are as well. We're going to cross-check that in two different places, one with your agent and then one with the appraiser as a fail-safe, to make sure if we're building a property that is currently vacant and is going to have somebody in it, that it is going to be able to rent. We're not assuming that you have a lease agreement already drawn up for the value on that. We're assuming that we're literally guessing. We're guessing based on the best amount of data we can provide and find what the rental value is going to be on those rental units. I don't know that I have the stomach to tell somebody to go build $4 million. Like, I was like, oh, you're answering the question. I don't want to hear what the mortgage payment is. No.
Well, see, I have a couple clients in Florida that have bought $3.5 million homes using a VA loan, and their net income supports that, because they're bringing home $400,000 or $500,000 a year, or $1 million a year, because they're business owners, they've gone out and established businesses, or they have properties, or they've built up. So this is not something that you talk about. Like, this is nobody's first time purchase is a $4 million multifamily. Hell no. I wouldn't want any of you guys to do that. But if you've done real estate investing for years and you're looking at a market where the market would support it and the rent would support it, and it's a low vacancy ratio market where you don't have to worry about vacancies and you get a quick turn and you have a lot of cash reserves, and you're financially in a position where it makes sense to do that, then I think we explore the conversation. But you can also build a 4-unit in Killeen, Texas for $450,000 and rent the shit out of that as well. So, like, what market are you in? Killeen, or are you in Orange County, California? And if you're in Orange County, California, then you're probably familiar with the cost of living there already, because you already live there. So, yeah, it's not ideal.
No, I think the highest VA loan I've ever done was 1.3, so you win. My guy was he worked for like Microsoft or something. And I was just like, I'm gonna buy a really cool house in Florida, and it had a chandelier above the pool, and I'm like, this safety, like, this doesn't get called out on the appraisal. This seems like a safety concern to have a chandelier.
That sounds like a fun swinging spot, like swinging on the chandelier, jumping into the pool. I mean,
it was giving my crib on MTV vibes when I was looking through the appraisal. All right, cool, go for it, whatever, it works. So, all right, we're gonna do Q&A, guys, and then we've been on for about an hour and a half. This will be recorded, and again, please, we have I keep forgetting her username. Haley is in the comments. She is with Brooke, and then I've got some of my folks in the comments. Also, with my team, go to the link in our bios to set up times to talk one-on-one. This will be put on YouTube, on both of our YouTube channels, VALoanBish, VALoanLady. It's that one damn gender, because I don't know how to change it, because I suck at technology. So Q&A, let's grab some Q&A, and then we'll wrap this up, guys. It's the VA one-time close construction of perm. Not all lenders offer it. So make sure whoever you are working with has said, yes, we have the product. Let's go ahead and call it out.
And we know how to do it.
Veterans United does not offer this. USAA does not offer this. Bank of America does not offer this. Your lender will likely tell you if they offer it, because that's one of the things that they do on a routine basis, hence us on this live. So it is going to take you between 4 to 6 months to close on this, depending on the complexity of whatever it is that you're wanting to build. Another 12 months to build it. You close on the loan, buy the land, pick the plans before they actually start building it, and then the money is dispersed to your builder in draws so that they can build it as it goes. And they can pay for it they can pay for your build with your loan funds out of the whole project. I'm trying to think of what else. Tiny homes count as modulars. Barn doors count as regular houses. Pretty much, if we can figure out if there are comparable properties for the house that you want to build, comparable properties meaning that we know what it's worth, you can build it.
A lot of questions on state approvals. We're both licensed in Texas, North Carolina, We're waiting on South Carolina, but Ariel is licensed in South Carolina. Virginia, Wyoming, Washington, Montana, Colorado, Texas. Did I say Texas already? Probably said Texas already.
You have New Jersey, Massachusetts, New York, any of those Northeast states?
Not yet, but we're working on them. Connecticut, I randomly got Connecticut. New Hampshire's almost done. New York is going to be a little ways out. But we do have connections with people in New York. New York's tough.
The specially adapted housing grant, yes, I refuse to get licensed in New York. I love all of you so much, but unless somebody's going to come sit down here with me and listen to me cuss about that paperwork, I'm not doing it. Not doing it.
Oh, God. Oklahoma, yes. Nebraska, yes. Kansas, yes. Missouri, yes.
You're listing the states I'm not in, so I'm just like, yep, that sounds good. All right, somebody list.
Yeah. Florida, of course.
Somebody just mentioned the specially adapted housing grant, so let me explain the process for adding on the specially adapted housing grant, because neither of us are going to be able to originate that for you. That loan is actually, it's not a loan, it's a grant. The specially adapted housing grant is meant for service members who have very specific needs, like if you need a wheelchair access, if you need ADA accessibility for any part of the house. I know some service members have disabilities that cause them to have hot flashes and they need special air conditioning units or additional air conditioning units above and beyond what is typically permitted. And you can use a specially adapted housing grant to install those things. You do not apply with that loan through a loan officer. You need to go to a veteran service officer. You can contact Allie Says Nope on TikTok or NTX service officer Thomas Belton. Both of those are TikToking VSOs that can assist you with getting that started. That goes through an approval process that goes directly through the Department of Veterans Affairs. It does not go through the same loan center that we use. But it is something that is a forgivable grant that gives you the funds to add on ADA accessibility needs based on what your disability ratings are. And I believe the cap is now like up to 120,000, I think. It was at like 89 and they increased it. And they do the same thing. They increase it every year, but that is entirely separate, and you start that process with somebody separate. So if you need that, I can get you in contact with somebody. I know enough to make myself dangerous on what they will cover. I think that answered the question. I hope that answered the question. And then also energy efficient improvements. So let me touch on that real quick, because this identified both energy efficient improvements and then also just standard utilities. Somebody was like, well, how am I going to pay to have the well hooked up? I'm like, well, you can't move into a house without running potable water. So it has to be either rolled in or you pay for it out of pocket. But if you don't pay for your well, septic, utility set up out of pocket, it is 110% getting rolled into that loan, boo-boo. You have to have running water. So whoever pays for it, it's getting covered one way or another. You do have to have running water. I don't think you can do rainwater because the government still says that's illegal, so take that up with a higher authority than me. So you do have to have some kind of septic or well. And then solar power is fine. You do have to have access to and plans for a backup generator system of some kind. And then for heat, you can use natural gas if you want to put a tank in. We can roll all those costs in with a loan. Glamping domes can they meet residual code?
I think that was that question I had before, and I don't believe that glamping domes do meet a residential code of construction.
Mm-mm. No, but I do want to bring up a really, really cool thing. So I met a veteran here on TikTok. It's Rusty'sRoostNC.com. And he bought a house with his VA loan and a lot of land. And then he got an SBA loan and he put glamping sites out in the river that he bought. Like his land had a little river on it. And I went there. It was gorgeous. Like I went and stayed there. That was super cool. So if anybody's looking at doing like revenue things like that, that's a great idea. I don't know what groups. Somebody find the Discord for veteran small business and add me to it, and I will just put all the great ideas that I'm like, you should do this with your VA loan, because I just want somebody to like make a bunch of cool stuff and then
then invite us.
Yes.
Are you guys can I ask, are you doing ayahuasca in these glamping tents? Just curious.
Sign me up.
Ayahuasca in Costa Rica, yes and yes.
Is it true you cannot get is it true you cannot get a mobile home on land without having a permanent foundation?
Permanently affixed to a foundation. So there's a permanent foundation is a very complicated title. There's like an earthquake bracing system that's considered a permanent foundation. There's perimeter walls that are considered permanent foundations. There's runners and tie downs considered permanent foundations. So it depends on what the appraiser considers a permanent foundation, but all of those things are approved through VA to be considered a permanent foundation.
You can't do a VA loan in Costa
No, I'm sorry. I was just teasing about Costa Rica. I meant like glamping tents, ayahuasca, camping in Costa Rica, not with a VA loan.
Yeah, I wish. You can't even get a VA loan in Guam. And let me tell you how mad that makes me because we own Guam.
I know, it's stupid.
So dumb. Can you buy barn? Can you use VA loan to buy land in the barn minimum? I don't understand that question, but I'm going to assume your question is, can you build with your VA loan, buy land, and put a barn dominium on your land? Yes, you can. You can absolutely do that.
What's the minimum score? 620 credit score.
For building, we can do
For building. Yes.
If you buy an existing home, we can go down to 500. Your rate's going to suck. Okay, what about 3D homes? Yes, I think we're recycling these questions now. Yes, you can do a 3D printed home. The biggest thing is we're going to need to see homes that are built with the same types of building materials. Doesn't need to be the same construction method, but it needs to be the same types of materials. So if you're doing a 3D printed home, you need to be able to find like cinder block or cement homes that we can appraise that home to.
Yeah, somebody just posted, I thought the VA doesn't require minimum credit score. They don't for regular VA loans, but for a VA one-time close, they do have a credit score requirement because it's a lender overlay because the lender is taking on higher risk, essentially. They have to hold these loans and not get them guaranteed until the construction is completed. So 620 is still pretty good, pretty aggressive, to be honest, to go up to 4 million, zero down. That's an awesome opportunity. So if your credit score is not at a 620 and you need help getting to a 620, let us know. We can all run credit simulators. We can tell you what you need to do to clean up your credit or get your score up over 620.
Yeah, what she said, retweet. Okay, and then we are getting recycled questions. Okay, guys, so we've done a bunch of these questions, and please do not feel mad at me when I say this next bit. We're gonna bring the live in the class to an end. We appreciate everybody jumping in and giving questions and comments. Our teams have been taking notes the entire time, and if you want more information, please, once again, go to the links in our bios and put in a request for more info. We both have links. Either one of us would be happy to help you. She's licensed in a bunch of the states that I'm not in the Midwest, Nebraska, Missouri, Kansas, Oklahoma. We're both in Texas. I'm in North Carolina. She's in North Carolina. Like, we are both happy to help you. Please go to the link, request to set up a one-on-one. Neither one of us are really in the business. Like, neither one of us are very good salespeople. We just like to tell you about the cool stuff you can do with your loan. So we're happy to go through it with you. We will be brutally honest with you. You need a 620 to build. You don't need a minimum credit score to use your regular VA loan. We do have lenders that, for our company, have us at a minimum of 500. My company can't go anything less than a 500. Brooke, what about you?
Yeah, I think we're at the same place now. Now, after we've transitioned, most investors are going to minimum it at 500. Yeah. And usually to qualify for the VA loan, you can't have a lot of lates in the last 12 months. So you're usually going to be over 500 anyways.
Yeah. So we've already covered that. We're going to put this recording on YouTube. I'm going to start downloading it as soon as I end it. I'm sure that's going to take 14 billion hours, but I will put it on YouTube. I'll make sure she's got a zip copy of it. We are going to do a more formal class coming up, which will have more examples and a better breakdown of what the numbers look like. We just got access to this product, so we wanted to make sure you guys knew about it because we are super excited about it. And we will get back to everybody on container homes. We've already asked the question. We need them to answer the question. The VA says you can do a container home. The lender has to say yes. So anyways, we appreciate everybody. If you have further questions, feel free to email either one of us. The next one, we will have an option to Zoom. YouTube is VALoanBish, B-I-S-H, or VALoanLady. It'll be on there, I'm hoping, by the end of the weekend. So, love y'all, mean it. Very excited to have access to this. Bye.
Thank you. Bye.